Yeah, so you really have to wait until the conditions are given. Most of the times you find that the signals are given in the 30 minutes. You can find at least proper signals which are given to you. From this point, to give you a signal, then the whole 30 minutes is going to go down. Then the other thing is we're trading the 30-minute strategy. This, okay, let me just do this so that I can explain on this. Yeah, so the setup I sent is this one. This is what I'm sure everyone has. So the signal was given from this point. The reason why the signal was given from this point, because this was the last trend after the last retest on that resistance point, which is here. Like there was a major resistance which was here, where market went, it made the first retest, it came back, it went back again, it made this another retest. Then at this point, it came back. From that point, this is where you see there's some noise coming from I don't know whose mic is on right now. Okay, so like I said, the 30 minutes is going to give you the signals. Most of the times when I'm trading, I use the 5 minutes. The 5 minutes will give me the signal. But one thing I really need to wait for is a good confirmation to tell me that now the market is going to go all the way down. So firstly, I need to look at the moving average on the RSI, which are going to show me a crossover where the exponential 40 crosses to the other side. Then also other side of these moving averages. Then you can also see a crossover here. I think I should bring back that one, the gold and the red one.
At your home with 1 second.
Hello. We're having a very hard time. Can't hear anything. Please about it. I think something's wrong with your mic. Can you please just have a look at your mic?
Hello? Hello?
Yes, King, we can get you now.
How clear is it now?
No.
It's very clear now.
It's very
Loud
clear
and
now.
clear.
Very
Okay.
clear.
Yeah.
Okay. So I'm now using headsets. So like I was saying, so the whole analysis starts from the 1 week. You need to look at the whole 1 week 1 week time frame. Like you look at what's happening on the 1 week time frame, so that so that you know what you're dealing with. So first thing, the problem is, okay, this is this is the actual MT5 trading platform. So but anyways, let me try and see how I can make it out right here by drawing let me just insert some shapes here, which are going to use as at least a major point of I'm sure the guy was talking about order blocks being order blocks here. But let's just do something like this. Okay, so this point in the 1 week is going to be your major resistance point, where the markets had to go and come back to that point. But anyways, I say a lot of people don't really go about trading the 1 week candlestick, because most of us who are day traders, we don't really swing trade. We don't have all that time to wait for the market to play out according to that. Like holding for a long time, it's a tough thing. Holding for a long time, it's a tough thing. So, but anyways, looking at how I've drawn the Fibonacci retracement right at this point. So for the day, what you expect for the market to play out for the day is, since this retracement, Fibonacci retracement, has been drawn for the week, it's a weekly retracement. So where we expect some sales is going to be at the level 23 here. That's why the day is trying to make the arrow saying it's going to go all the way down, because once the market reaches the 23 level, it has to go all the way down to the 50. That's why a lot of people put a tech TP, because at the 50 level, that's why you find another, it can be a resistance, or the market is just going to consolidate. But once it breaks that, the next level, which is going to be somewhere around the 70 level, which is going to be at this point here. At this point here is what you're going to take as your support. And once that support is broken, which means the market is going to go all the way down to the 100 mark. But all this takes a lot of days to play out. Like it can even take 2 weeks or even a month for it to reach this point. So this I'm showing you looking at, I was trying to show you how to use the Fibonacci, looking at how the market structure is. But right now, so this is going to be a retracement for the week to come, because looking at the candlestick for the week, it's actually moving all the way down, as you can see. So if we go back to the 4 hours, you're going to see what I mean when it comes to the Fibonacci retracement. So the 4 hours, the 23 mark is actually where the support is, you see. So this support, once a breakout occurs at this, you start looking for selling opportunities. Like I said, if you look at it in the 1 day, it's the 23 level, which is showing you a point where the market will start. Hello? Hello?
Hello, sir.
I don't know what's up. I don't know what's happening with my network right now, but it's not really a good thing. I still have a lot of bundles here, but I don't know why the network. I can't really tell for sure why the network is cutting. Hello?
We understand the Zambia boss.
Hello?
Hello, boss.
I don't know. We're on a Zoom with a lot of people and the network is tripping. But anyways, let me see if I can explain where we left that from. Okay, so as you can see, like I was explaining right now, the market today has just been going all the way down because it reached the highest point. It reached the highest point. You see? So right now, can you get me?
Yes, sir, we can get you.
Okay, so I'm explaining this according to how the market is going to play out, because you can use the Fibonacci retracement to show you how the market is going to move the next coming, at least if Fibonacci is the one which is going to show you how the market is going to play out next. So for the day, as you can see, the market is trying to rally all the way down. That's why you can see that in the 4 hours, it's trying to create that the crossing has actually happened. In the 4 hours, the crossing happened from there. It's running all the way down to this 23 level. So if you're going to wait for a perfect setup, which is going to play out just okay, you have to wait until the market breaks this. Once it just breaks this, it will go all the way down to this other level. Because if you see the 38 and the 61, these are levels which are the support levels, as you can see. If you can see, like the support and resistance has already drawn them. But if you use the Fibonacci, that's why it's going to mark the exact points where these levels are. So the Fibonacci, if you are a trader who trades using support and resistance and supply and demand, you can definitely get this. You should learn more about the Fibonacci and use it most of the times, because it draws the exact points which you need. The exact points. Look at this. This is the 38. This is the 23. All these levels are marked on the Fibonacci and their support levels coming down. So when you're trading volatility market, you always have to look for a breakout. Once you see the conditions have been given out, you just look for a breakout. Once that breakout has been done, then the market will go the way it's supposed to go. Like you don't even have to worry about it. Like you don't have to worry about it. Like the market will go its way. So the only thing which is going to kill you when it comes to trading is not having enough patience. Where you take your trades anyhow, where you feel like taking your trades, that's why you feel like taking them. So one thing I'm going to show you, this is going to be analysis for this week. So this is going to be analysis for this week. Like I said, once you see a breakout of this level, just so that the market is going to go down, it's going to go down. So your TP is going to be expected to be at this level here. So since I've shown you how the day is going to play out, let me give you examples of how the market played out. An example is going to be this one, where the market reached from this point, it went to the highest point. So if I get my Fibonacci right now, I press it from this point, I put it to the highest point. And the best part about the whole indicators which we're using to trade this market is that they give you at least those points which you need, to take advantage of everything. Like I give you those points. That's the best part, because here you see the zigzag, which is going to show you the lowest resistance point, then the highest, the lowest support, like the lowest point of the market, then at this point to show you the highest point of the market. Then once the market starts going down, the same thing which I was explaining about the 23, this is what played out in the previous market movement. As you can see, it reached the highest point. This was the highest point. After reaching the highest point, it started going all the way down. Look at what happened. Here, the market was consolidating at the 23. The moment this moving average crossed to the other side, the moment it crossed to the other side, look at what happened. The market went all the way down. Look at it, even broke, it even went to the, it even broke these other previous support points. After breaking this strong support, which was here, it rushed all the way down. It went all the way down before reaching this point and made another retracement and came back, and it went all the way down. It even broke the 100 level. It went all the way down to this point. So if we go back to this time and zoom in to the other smaller time frame, you understand what was going on in the market at that time and that point of time. So let me just go to 4 hours and I go back to that point. Let me just go back to that point where the market played out. When was that? Yeah. So yeah. So this is what we have right here. So as you can see, the market was ranging. More like if you know, when the market is ranging, it's ranging in a downwards movement right here. So if you are to draw your trend lines, you see that the market was going down. So what was expected here, it was what was expected here after the last support, after the last resistance trend line. We were expecting maybe a breakout of that trend or a breakout of the lower trend, like a support trend. So a breakout of the support trend actually is the one which occurred here. Since we didn't have a breakout here, so what came in our mind is the 23 mark, which you can see here. The 23, like I said, you see the crossing, you see the signal, it gives you the signal, you see the crossing. Then what happens? Just after that crossing, at the 23, you see what happened? The market started going all the way down. As you can see, it even broke all the previous structures which were here. It broke them. Like here, we're expecting, I don't know if it has even touched the exact same points, but let me just, yeah, this is the highest point. Okay. So I'm sure the lower point, let me go to the lower point so that we can have at least an accurate reading. Yeah, somewhere here. Okay. So as you can see, once you just reached here, this is the 4 hours. We had the consolidation at 38 because there was a form of support at that point. So that consolidation is the one which at least tried to push price to go the. It was trying to push price back, but it broke it because the trend was too strong. The bearish trend was too, the bearish trend was too strong. And where all this played out, the reason why we're using the RSI and the moving average is because once the crossing occurs here, once the 40 exponential is above the moving averages, then the market would definitely go down, like it goes down. It goes down. So this is the 4 hours. We go in with the 1 hour so that maybe you can have a clear view of what I was talking about, where where after market played out the same way it's supposed to play out, then what happened next? So if you look at it in the 1 hour, but all this I'm telling you right now, the indicators already have the Fibonacci and that other stuff. So in the 1 hour, this is what you're going to see. Like I was talking about where the market was ranging in the 4 hours time frame. This is what 63. You see, the market was ranging here. This is one block which was showing in the 4 hours, which the market was ranging. Just after that, it broke out. Then after it broke out, you see, it was ranging, it broke out, it came and made the retest at this same point here, which formed a resistance. Then it went down. It tried to make that retest. If you draw a trend line coming from that, touching that point and touching that point, you see that the market was still in a downtrend motion. Then afterwards, it broke out. After it broke out, it started now ranging in that point. But let's focus on how the market played out before a massive breakout happened. So let's just zoom out a little bit here. Okay. So our main key is going to be two levels, the 23 and the 78 on the Fibonacci, because those are the key areas. I'm going to show you on the indicator I gave you. So I just want to show you the 23 here. So this Fibonacci, we marked it in what this is a weekly, yeah, it's one week where it showed the good movement. So this is 23, but this is 23 here. Then this is 1 hour. So if you go back to 30 minutes, you see the breakout which happened at this point. As you can see, the breakout happened at this point in here. So the breakout happened and the market went down. So if you look at it even in the 15, you see, even in the 15, the breakout happened from this point. And look at how the market went down. Like the market side just going down from this point. If we look at it in the 5, it's going to show us almost the same thing. It's that point where once a breakout happens, then the market doesn't really even come back to that point. It just goes. So you see, on the 5 minutes, this is a 23 mark, and look at what happened. It was at the peak of the 23. Where is that? So you see, so here the 23, the signal was given here. As you can see, a signal was given, the crossings happened, and the market started going down. From that point, if you're using a higher time frame, then you see that the market is at the 23, then it's pushing price down. Then you see a signal on the lower time frame, like a 5 minutes time frame. Just know that your entry is going to go all the way down. At least your TP, you can take it at the level 50, because at the level 50, which means you have made a lot of profit. Like you can hold, like that's like for swing trading. Like that's for swing trading. So from the 23, look at what happened. The market came back to the 38. The 38, another signal was given. You see, another strong signal was given. Then the market started going all the way down to the 50. It broke the 50, then it went down to the 60, to the 61. So this is just the normal Fibonacci, but for this, maybe we can even modify a Fibonacci, which is going to work with everything. But when it comes to Fibonacci, it just means how you are going to make them work is you need to look at the highest point of the market and the lowest point of the market. So basically, what we have right now, let me see this. What we have right now is this. Let me see. Okay, it seems like I have a mix up of the 1 minute This is the 1 minute Fibonacci, which shows the 100 level, which it showed the highest point, then the 76 level, and it's reversed. It's reversed. So the highest point was the 100 here. This is the 1 minute. It shows in the 1 minute. So I'm sure the template has collided with the other point, which was supposed to be there. Like this is the 100. This is what I'm seeing in the 1 minute. So like the first 100, like the first movement coming from where the point of sale was given, another point of sale was given here. So just after the 76, we saw a breakout of structure here. Like it broke the previous support, then it started going all the way down. As you can see, it even reached now the highest point of the market, which is in this, at this point it was a 23 mark, because it hasn't gone all the way down to that point. So it reached the 23 mark. But the previous market movement, it was showing a breakout of the 23, it went all the way down to the 0 mark. So for this, you use the 70 if you want to take a good trade. So you have to wait until the conditions are given to you, perfect conditions. Like here, where you see that if I get, okay, this is 1 minute. So in the 1 minute, if I get just the Fibonacci, which comes with the MetaTrader 5, if I draw it to this point here, okay, so where is that? Come back. I hope you guys are getting me right now as I'm explaining all this.
Yes,
No,
I
we're
get it.
getting you very well.
Okay, so
Powerful.
so as you can see here, this is just the basic 1 minute structure. So when you see the market hitting the highest point here, then it comes back and makes a retest here. Then it doesn't break out. You get your Fibonacci, you draw that line. So what you need to wait for is at least you see a breakout of the structure, where you see the 23 mark here. You see the first entry would have been here, but the market made a retracement, but it didn't even surpass that point of the 23. It didn't. So from the 23, say pushing price all the way down, like it even went all the way down to the 100 mark, because this is just a 1 minute time frame. So 1 minute, we know 1 minute can go all the way down. So for this point where the market is doing this, like you have to wait. You don't have to rush in and take a trade, because look at this. It will give you a signal here, because the market is actually ranging, trying to look for a way out. So at this point, to give you a signal to sell, and later on it gives you a signal to buy. Then again here to give you a signal to sell, because here there's resistance and support. It's just nearby. So the same Zoom session I had.
I'm coming. You cry now.
Someone's mic is on right now. Anyways, what I was explaining was so here, like you can see, the market is ranging, but the possible thing which can happen right now, because we're waiting for, it's almost 3 minutes to another candlestick which is going to open, the 1 hour candlestick which is going to open. So here, this candlestick has been ranging. So the next candlestick which is going to open in the next 3 minutes is the one which is now going to show us a perfect direction of where the market is going to go. So, but most of the times the Fibonacci is the one which
let me listen to now. You talk plenty at once. I don't program. I said no. I did listen to something. Next minute, I'm going to listen to something. They distract me.
Hello. We're only remaining with 3 minutes right now. But anyways, for guys, like I said, if you want to scalp the market, forgetting the Fibonacci and the other stuff, Like here, you see, it gave you a sell signal, but the market actually is trying to push price up. Because here, it's more like the market is ranging. So it will give you a buy signal, it will give you a sell signal. The same time, it will give you another buy signal, and then again to give you a sell signal, because the market is actually ranging at this point. So what you need to look out for is at least a crossing like this. Once you say a crossing like this in the 1 minute, it can be strong enough to even break this structure and go all the way up at this point. So once you see that, at least you can take full advantage of that, and because here the crossing is about to happen, and you can take advantage of opening some sell positions, and your TP is basically going to be at this level here. That's where your TP is supposed to be. As you can see, the market is actually pushing price and it's breaking this structure right now. So if you put your buy orders after a breakout where the crossing, as you can see, the crossing has happened and the market is pushing up. So this is from this point to that point. My account right now, this account, like I can't trade this account right now. It's going on, it's under investigation from Deriv is investigating the account, so that's why you're not seeing a. It's a real account. That's why, but you're not seeing where I can open positions from here. As you can see, there's nothing where I can open a position from. So, and I can't look. You see, I can't even trade on this account right now. Like I can't trade on this account. So I could have given at least a demonstration to see how the market is going to play out. But at this point, if you're scalping, if you want to take those sharp entries, which are going to take just 1 minute, once you just see the crossing here and you see an alert has been given to you, when you take your first positions, I'm sure they're going to be in this candlestick here. They're going to be in this candlestick here. Once you take those entries, then the market is just going to go all the way up, like you've been profits. In 1 minute, if you're using lot size 1, that's how much. If you're using lot size 1, that's almost like $20. Or from this point to that point, this is 1 minute time frame. That can be like $30. Because this market is volatile, we know that. So once you just see at least a perfect signal like that, then you take it, then you're good to go. Because the crossing has happened there, then at least you know what you're doing. Like you can take advantage of it. So what level is this? Okay, this is a little bit confusing. I'm not really sure how yours is looking at, how yours is looking like. So after this, I would appreciate if everyone can send screenshots and show me how their charts is looking like, so that we can see how we can work on perfecting this just to be okay. Because I was in the process of at least doing something. There's sometimes where you receive false signals. So I'm trying to work on that and sort it out so that you can only have those perfect signals. For those people who